Hi, everybody. It's Carolyn Hoti. We've got the Carolyn Hoti team here, Garrett Kahn, Sharon Parmenter, and we have our guest and friend, Juha Tuominen with Root Mortgages joining us today. Thank you for being here. And we are going to just spend a little time here picking Juha's brain on what is going on in our mortgage industry right now during this the pandemic time. And I think that the number one thing people are probably wanting to know right now is where are we at with the rates? We know that they were very low in the beginning of the year, and people are wondering during this pandemic, have they gone down? Have they stayed the same? We know we had an uptick. Where are we at now, and where do we expect it to go?
Great question, Carolyn. Thanks for having me on board. So I've been helping home buyers lending-wise last 18 years in the Portland metro area mainly, and interest rates did come down I would say about 6 weeks ago, and they were pretty much right at the all-time low point. Right now, all the lenders got pretty backed up, and they lost some liquidity, and then the coronavirus hit. So many of the lenders kind of slowed down the floodgates and artificially raised the rates not to take on much more business. Rates are still really good. Lately, I've been quoting low 3% rates for well-qualified home buyers for conventional loans, FHA, USDA, and VA loans.
Okay.
And I believe rates will stay low rest of this year.
Okay, excellent, excellent. And I'm going to step back just a little bit. In Juha's with Root Mortgage, which is a mortgage brokerage, which means that he can work with about 12 to 13 different banks. So lots of loan options, lots of choices, options for best plans for individuals. And so I'm going to jump over, let's slide over to Garrett. What questions might you have? Garrett and Sharon are both exclusively working with our buyers. And so can you please share what's coming up today as you're out there working real time in the trenches with the buyers, Garrett?
Yeah, I think a lot of people want to know basically how hard it is to get pre-approved these days. And of course, how long it takes for a loan to get closed is coming up a fair amount as well.
Mm-hmm.
Great question, Garrett. Yeah, lenders are dealing with heavy loan volumes, but home purchase loans always will take a priority. I would say if we have a fully pre-approved buyer and there are no delays with the inspections, for example, nor the appraisals, I would say 30 days, we can close in 30 days. However, we are having some issues lately with appraisals. Some of the older appraisers are not doing appraisals right now. However, Fannie Mae and Freddie Mac recently have released and come up with some new guidelines where appraisers can do try-by appraisal, so that will help us a little bit. Overall, pre-approval process is gotten a little bit harder, especially for FHA home buyers, where the minimum credit score criteria has gone up, debt-to-income ratio has come down, and in some cases, lenders are asking or requiring reserves after loan closing. And also, we used to have pre-approvals be good for 4 months. Some lenders now are only making us have the pre-approvals good for 2 months. And one other thing that's a big change lately, the employment verifications, because many people unfortunately have lost jobs, reduced hours, or been furloughed. Obviously, lenders have always done verification of employment the day of funding and recording, and lenders are still doing that. But even this morning, lender was still doing a verification of employment 2 weeks after the loan closing before they are willing to buy the loan of our warehouse lines. So there are a lot of things going on, not just in the beginning part of the process, during the process, but even after the loan has closed.
Okay. Thank you for sharing that. I want to point out one thing that I'm hearing out of your summary right there, Juha, is that there still is a good amount of regulations and guidelines in regard to the loan process. So just to clarify, in what we're going through right now, this pandemic, while the last time we went through a setback in the economy was the housing crisis, and people were able to get loans very, very easily. So what I'm hearing right now is in entering into another bit of a setback with the economy, the mortgage industry has actually tightened a little bit on that. So still, we're not hearing that real buyers, that qualified buyers are not getting loans, but rather that the mortgage industry is doing their due diligence to make sure that people are able to qualify and sustain these loans.
That's correct, Carolyn. The last crisis in 2008, it was mainly caused by real estate lending guidelines and too lax of requirements for lending and loans. Since then, lenders, the guidelines back, and it's been more difficult, or actually it's lending, we've been doing it the right way. And just recently, since the coronavirus started happening, lenders have been tightening up their guidelines. So I would say people who should be getting loans are still getting loans. There's a little bit more paperwork required, more checks in place, just to make sure that the lenders can fund and record the loans, and they can sell the loan on the secondary market, and that servicers are able to continue to stay in business.
Great, that sounds good. Good stuff. Hey, Sharon, what questions are coming up for you with your buyers out there right now?
Well, you know, Juha, what I've heard a lot of chatter around lately are jumbo loans and the lack of jumbo loans. Can you identify what exactly a jumbo loan is and all of the options around that that are still in play?
Great question, Sharon. Basically, jumbo loan in our area technically is a loan greater than $510,400. That's the limit for conventional conforming loan. So anything greater than that would be either considered a jumbo mortgage or a high balance loan. And due to the liquidity issues, jumbo lending has gotten more difficult. There are still some local banks, nationwide banks and credit unions that are able to offer jumbo financing, mainly because they do what's called portfolio lending. So those are still good options out there. So there are still jumbo lenders out there, but not everybody can offer jumbo loans. Another loan option to perhaps compare jumbo loan with would be a financing like 80-10-10 type of financing, 10% down payment, 80% first loan, up to perhaps the maximum conventional loan limit of $510,400. And then the other 10% would be home equity line of credit. So you'd have two mortgage payments. Home equity line of credit interest rates actually have been coming down with Fed lowering the rates, because when Fed lowers the rates, it doesn't directly affect long-term mortgage rates. It more affects the prime rate, and most of the home equity lines of credit are tied to the prime rate. So with that split financing option, the second loan interest rates has come down. So people do have options, because sometimes it's harder to qualify for a jumbo mortgage regarding the reserve requirements and debt to income ratio. So sometimes combination loan could be even a better option, but I would compare both.
Excellent.
Great.
Excellent. One of the things that I have heard in speaking with our colleagues out there is that we've had some low appraisals come back in. Have you seen any of that run across your desk lately with the pandemic time, and maybe the lenders or appraisers being a little bit more cautious, conservative maybe is a better word?
Well, I can only speak for myself and the loans I have done. I have not had any appraisal values coming in lower than the sales price. All of the appraisals so far this year have at least come in the sales price, and many of them have come in higher than the sales price. Sometimes financing transaction, the appraisal has maybe come in a little bit lower than the homeowner or we were estimating. We were still able to make the deal work. What I'm thinking though, with the market the way it is right now due to the virus. The comps might change going forward, because right now we have a fairly good comparable properties for the appraiser to compare the subject property to. So I haven't had personally, I haven't dealt with that issue, but I'm sure that can happen. Usually every year, maybe 1 or 2% of the transaction that can take place, especially if the sales price is artificially inflated due to maybe seller covering some of the loan closing costs.
Okay. Okay. Very good. That's good to know. How has the, besides refis, we're obviously up with the lower rates. How about purchases? What is from the mortgage side, what has your experience been since, I believe our shelter in place started March 23rd? Am I correct in saying that? And I think the schools started shutting down about March 12th or March 13th. Have you noticed a drop, an increase? Have you noticed any variation in the number of contracts of purchases coming across your desk, Juha?
Well, I would say I'm still getting people wanting to get pre-approved almost on a daily basis. I would say that hasn't changed, at least for me, too much.
Mm-hmm.
With the lower rates, we've still been able to help people with their refinancing needs. I have had some people back out of the contracts due to coronavirus,
Mm-hmm.
or taking a break temporarily. I believe when we get past this stay-at-home situation, that there are going to be lots of buying and selling activity.
Excellent. Very good. Well, and just sliding back as far as the housing market goes, I want to just quote, we had some numbers yesterday, and I'm gonna run through those. So as far as the last week, just, and wrapping and tying this in with our mortgage industry and the housing market, in the last week we had 87 new listings put on in the Portland metro area. We had 34 homes go into contract. And again, this is Portland metro within a week's time period in the throes of the shelter in place, and 46 homes that have closed. So we are absolutely still seeing activity out there. It sounds like, Juha, the rates are still low. Could you just quickly snapshot a 15, currently today, I know you can only quote in real time, but a 15-year, a 30-year, give us just a quick rundown of a couple of rates that would be relevant loans that people would do.
Well, I'm not, I don't think I'm technically supposed to be quoting rates without APR. It's, it's standard
Okay,
nowadays.
sorry.
I would say it's it's a great question. I don't want to get in trouble. But
no, we don't want to get you in trouble, Juha.
One thing I could say that usually 15-year term interest rate has been significantly lower than 20, 25, or 30-year fixed term. Lately, the difference between 15-year interest rate and 30-year hasn't been as much. But interest rates are really good. I'd recommend people connecting with their preferred or favorite loan person to find out. I think it would be a good time. People are home. People might have more extra time in their hands. If your interest rate is starts at 4% or greater, touch base with your local mortgage person and have that person run some scenarios for you. See if refinancing would make sense to do.
Excellent. Very good. Sharon and Garrett, any other questions that are coming to mind that we should be asking Juha on this call?
No, Juha, you're really thorough. Thank you so much.
Mm-hmm. Garrett, anything else?
No, I think we covered everything. Yeah, thank you so much, Juha.
Yeah.
Thank you guys. Thanks for letting me be part of your call.
Yeah, thank you so much. Make it great. Bye.
Yep. Bye.
Bye.